So how can passive investors take advantage of the tax benefits offered by opportunity zones? And what should they look for when evaluating potential investments in these zones?
Yeah, the way so to your point, the opportunity zone only came out, I think, at the end of 17 or something. So it's only 5, 6 years old. That's part of the reason it's totally brand new. It never existed before. The way an investor takes advantage of it, they've got to have a taxable recognition event generating capital gains from something. They're selling stocks, they're selling a rental property, they're selling a business.
Or exit from one
Yeah,
syndication.
so they've got capital gains income that they're looking to. I don't want to pay tax on it right now, so I reinvest that into a qualified opportunity zone investment. It could be a syndication, could be their own for that matter, but something that, the syndication is going out buying an asset in an opportunity zone. The benefits to the investor, it's basically twofold, is they've been able to defer the taxes that they would otherwise have to pay on the front end, and they can defer, and that, they have to basically come due with the taxes in 2026. 6 years ago, this is a longer deferral period. Now we're a little bit shorter, right? But the benefit is still there that they can defer the tax a couple of years. But the big carrot that they're dangling is if they keep the money in that investment and the syndication keeps their opportunity zone investments for at least 10 years, the appreciation on that replacement property can become totally tax-free when it's sold eventually down the road. So that, in the right circumstances, if there's an investor and likes the marketplace, likes the investment, and is not going to need that cash for 10 years per se, and is okay with that investment sitting there for 10 years and thinks the appreciation is going to be there, then that can definitely make sense. But obviously there's other requirements and things and hurdles, but that's, I think, probably one of the big things that an investor needs to look at is what's that 10-year time frame look like?
Yeah, I think the ozone works really well for, we've seen it like, okay, one syndication investment exits, and I don't have other ways to defer taxes. I'm going to invest in another syndication that's like a opportunity zone. We see that a lot in kind of failed or partially failed 1031 exchanges. So someone tried to do a 1031, but something happened. It didn't work out as planned. Now I have this gain. I could still defer the opportunity zone. I think probably a couple of the bigger plays here that we see with clients is sale of businesses. So you have a doctor or you have an attorney selling their practice. And for those, for the most part, you can't really 1031 exchange. So opportunity zone is a great way to defer the taxes on that, or stock transactions as well, on a similar note.